Good evening and welcome to the Silicon Valley Entrepreneur, a series of conversations with startup companies and the investors who fund them. I'm Chris Gill, President and CEO of SVASE, the Silicon Valley Association of Startup Entrepreneurs, and I'm delighted to have with us tonight Bill Reichert of Garage Technology Ventures, one of the most prolific and well-known investors in Silicon Valley. So good to have you along with us, Bill.
Thank you very much, Chris. Great to be here.
So can you tell us, just before we go into it, can you tell us a little bit about Garage and the history of Garage and how it came about?
Sure, yes. Garage Technology Ventures was inspired by a great man by the name of Craig Johnson, who was the founder of Venture Law Group, who in the late 90s, when venture was exploding and entrepreneurship was exploding, he had the big idea that the world didn't need another venture capital firm. What it really needed were some people who had expertise in starting up startups, who could help find the best companies anywhere around the world, help them pull together their businesses into reasonable plans, and then put them together and with the right investors in whatever venture community they were talking about.
Great. Okay. So you've moved on from those days, and you invested in tens of companies, hundreds of companies over the last
in the early
10 years.
Over the last 12 years now, we've invested in nearly 150 companies.
Wow.
Actually. So the vast bulk of those were during the bubble, during the initial phase of Garage. When we found such companies as Pandora Media, which recently had an exit, we found a company called Left Hand Networks in Boulder, Colorado, which was sold to Hewlett-Packard. We found a company in Israel called Answers.com, which eventually went public. And we found a number of other companies that had, very prominent experiences over the years, and we also found a lot of companies that didn't make it through the bubble. But that's okay. That's the venture capital biz. Then, after the bubble burst in 2002, 3, 4, we reinvented Garage to address the needs of the market. At that point, venture capital had totally dried up. Nobody was doing seed stage investing. We had a pot of money left over from the bubble, and we bumped into some guys at CalPERS who said, we're worried about what's happening in the venture community. We decided to reinvent ourselves as a seed and early stage venture fund. So since 2003, we've been operating as a venture fund, although with that original spirit of giving back to entrepreneurs and helping startups start up.
Okay, and you've invested in a lot of different technologies. You mentioned some of the companies there. More recently, you're looking to specialize in the clean tech area. Am I right in that?
Well, not exactly, Chris.
Okay, all right.
Just to clarify the Garage strategy.
Please do.
We have always been technology agnostic, and our thesis has always been it doesn't make sense to try to institute a fund that's focused narrowly on a specific technology, because technology is always moving and technology is always changing. And so from the beginning, we said our thesis is that the most exciting new technologies are going to emerge from the innovation ecosystem driven by entrepreneurs, engineers and scientists and other entrepreneurs. And so from the beginning, we invested across the spectrum in IT, internet, consumer, business, material science back then. It wasn't called clean tech. We even did life sciences back then. And we did US companies, we did Israeli companies, we did international companies. So that's always been our thesis, that we want to have access to the best minds wherever they are, anywhere in the world, and not restrict ourselves to any particular label of company. But what it means is that we were very early investors in what became clean tech.
Okay.
We invested in clean tech before it was called clean tech, and wound up doing very, very well. The very first pure play clean tech IPO was a company called Hoku Scientific, and we were the only California venture capitalist in that particular investment. And again, that came from having an open mind toward novel technologies wherever they might emerge that could have a global competitive advantage in their success.
Right. And when we teed this up, we were going to talk a little bit about the clean tech space. And as luck or bad luck would have it, there's been the Solyndra issue has come up. Well, what's your take on what happened there?
Yeah. So yeah, Solyndra and clean tech more generally has gone through a lot of difficulties over the last couple of years for a whole variety of reasons we can talk about. But Solyndra particularly, without picking on that particular company, and I can't say that I know in depth exactly what went on there. But when we looked at the space, and we are also investors in the photovoltaic space, just looking at Solyndra as it came out, one of the things that I felt about that company was there is a company that is driven more by invention than by entrepreneurship.
Could you explain that a little bit?
Sure. One of the big challenges in early stage startup innovation is that there's so many uncertainties that you cannot put a fixed stake in the ground around your business too early on, because too many other things you're going to discover are faulty assumptions, changes in the marketplace, competitive dynamics, market dynamics. So you have to be nimble to the dynamics of the market. But Solyndra was a very clever, very innovative new technology of embedding thin film solar material inside glass tubes, which gave it a certain set of advantages. It turned out those advantages were interesting, but the market moved past that company's competitive advantage before that company really got to market. And so there you had an example of a company that, what we're going to build is this technology. And they were locked into that technology, and they couldn't adapt to the change in the marketplace. So by comparison, without tooting our particular horn, the companies we've invested in generally in the clean tech sector, what we found is they started out with an innovative technology that had the ability to make a dramatic impact on their sector, but in each case we saw them have to shift their business models as the market shifted over time.
Okay.
And Solyndra just didn't have that many degrees of freedom. But fundamentally, that's what seed stage, early stage venture capital is all about. You have to have the nimbleness and the degrees of freedom to be able to shift as the market changes in the early stages of a developing market. Okay,
and even prior to what's happened recently, the appetite from investors for investing in these companies that require large amounts of money to build stuff to generate electricity seems to have been going down. They've become less interested in it. And most people think of that when they think of clean tech, but clean tech actually covers a very wide area. So where do you perceive the bigger opportunities are?
Yeah. Well, to address the first part of your comment about the evolution of the clean tech sector and capital efficiency and capital inefficiency, what did happen was there was irrational exuberance around the clean tech space. The two big spaces in clean tech in the early days were solar, photovoltaics, and other variations on solar, and biofuels. Converting, initially we saw a lot of the non-venture sector investing very heavily in ethanol production, and then the investor sector came behind it with so-called second-generation biofuels, investing in those technologies. And it seemed at that point as though capital was infinite and cheap, because the idea that you could change the world in terms of energy generation with these novel technologies was captivating to a lot of investors, to a lot of LPs as well. And indeed, it's still captivating. But what happened was, as a sector, venture capital overinvested in too many of these companies that never had validated that they had long-term sustainable economics. Nobody anticipated, other than a few highly perspicacious VCs, that it was indeed possible that the price of oil could go down at some point, in the future. When the 2008 meltdown happened, the entire game changed in terms of the economics of clean tech. And all of a sudden, companies that were assuming $5 gas and $6 diesel all of a sudden discovered, oops, that wasn't necessarily the current economic environment. And so investments that should never have been made in the first place in highly capital intensive businesses wound up getting challenged, highly challenged,
yep.
as we say. Some have made it through, fortunately for all of us, and some have not made it through, and others we're just going to have to find out. But fundamentally, the longer play in clean tech, the second part of your question, where are the opportunities? Well, clean tech is an extremely broad sector. It's a label that covers an awful lot of technologies. And frankly, the analogy is, in our experience in the venture world, about 20 years ago, there was an explosion of investments in a part of the information technology world in this area that was referred to as multimedia.
Yep.
And all of a sudden, there was this big idea that we could add multiple media to our software, and so you could actually put in sound, and you could put in animation, and you could put in even images, and,
yep.
and that was a breakthrough, right? Remember, in the IT world.
Yep.
But at the end of the day, multimedia covered a huge swath of technologies from infrastructure through content that were wildly different businesses, different economics, different models. Same in clean tech today. The businesses from one end of the spectrum to the other have wildly different business models. At one end, you've got the energy creation world, which is about figuring out a way you can create commodity products, whether it's fuel or electricity or something else, chemicals now, whether you can create commodity products at a discount to what the rest of the world can create. That's a very different challenge. Then sort of at the other end of the spectrum, you've got what you might call clean tech IT, where the idea is to use software, to use data analysis, to use predictive analysis, behavioral analysis, to implement systems that can improve the efficiency of a given system, whether it's a building, or it's a car, or it's a data center, or it's a computer, or it's a device. That's a very different type of challenge than creating oil, right?
Right.
So very wide spectrum and lots of stuff in between. But it's tremendously exciting in an entirely different way than for example, social networks is exciting. That's a really exciting domain, social networks are, but in my humble point of view, the idea of working with a team of scientists and engineers and brilliant minds around a novel technology that might be a new material that could fundamentally change the economics of entire industries is at least equally exciting in terms of the opportunity.
Okay. So the opportunities for entrepreneurs coming into or being interested in coming into the broad clean tech space.
Yeah.
We know that if something's hot now, it's already gone,
right.
and you have to be looking where the puck's going to be rather than where it is now.
Right.
So what do you see as future things that entrepreneurs could be looking at as areas to spot problems they could come up with solutions for?
Right. Well, in fact, just like the internet, embedded in every clean tech sector is the opportunity for new technologies and new businesses to transform those sectors. So what I mean by that, you remember back in the days of the internet when we had the web browser, right? And so the web browser appeared and we gave us this opportunity to connect over the internet and exchange things and buy things and all those wonderful things. But you'll remember the browser really sucked as an interface.
Yes.
Right?
Yes.
And to some extent, it still sucks as an interface. I
Yep.
mean, it's amazing. If you think about the history of software and you think about where we thought software would be by now when we were kids,
Mm-hmm.
when we saw the movie 2001: A Space Odyssey, right? And what we imagined 2001
Mm-hmm.
would be,
Mm-hmm.
You assumed artificial intelligence, you assumed all these capabilities of software that indeed are not even there today. There's always opportunities to embedded within massive changes in technology. There's always opportunities to have massive reinventions of that same technology, and we've seen it now in the internet,
right,
in many dimensions, right? The way that clients behave, the way you do client server, now known as cloud, right?
Yes, that's
right.
Right. Yes.
So, right, these reinventions on top of older models. Same thing, for example, just to pick on solar. There are all sorts of elements in the whole solar photovoltaic ecosystem that have the potential of being dramatically improved. And now that solar is a massive global industry, a modest improvement in one of the elements, say for example the inverter, or some of the coating materials, or going from rigid to flexible, modest technology breakthroughs within that ecosystem now can be huge businesses unto themselves. So even within the sectors that are considered now, oops, we shouldn't have done that, even within those sectors, they're still massive businesses and have opportunities for enhancements. You don't want to go in the business of building power plants as an entrepreneur. That was, I would say, generally a mistake that venture got into. But the technology that caused venture to build power plants, i.e., totally integrated, vertically integrated solar businesses, right? The underlying technologies, the real value proposition there, still could create a great deal of value if you could partner with incumbents and figure out a way to bring those new technologies to market without incurring all of the massive capital cost.
Okay, so given the huge valuations that a lot of the social network and gaming, so software-driven stuff,
right,
has created,
right,
and the paper wealth, at least for the investors that have invested in them.
Right.
Given that the amount of money that's going into venture capital,
right,
is not equaling anything like 50% of the money that's being spent, and this is,
right,
after a number of years,
right,
of a very similar situation. There's
right,
less money going in than going out.
Right.
Is there the appetite in the venture world for continuing to invest in what seems to be very long-term, very risky, very high cash consuming areas? What's your take on this?
Yeah, I think clearly the market has given us the answer to that question, and you've seen this massive shift of venture talent over to this very narrow part of the venture spectrum, which is the social, local, mobile gaming space.
Yep.
And just a vast amount of disproportionate number of startups and angel investors and new venture funds and even old venture funds that are crowding into that space. So the good news is that across the venture spectrum, though, there's always some group of players who see the opportunity where the crowd is not. And so, we're still seeing startups in other sectors where feels like they're out of favor now, and that's what I think most experienced venture capitalists realize. The best opportunities are investing in novel technologies in real economic sectors that are out of favor, because that's where you can get in low. That's where you have time to build significant companies without necessarily experiencing all the intense competition of 63 venture-backed competitors that are chasing the same space. So, we're still seeing plenty of activity in clean tech and material science and that sort of space. Plus, the other good news for entrepreneurs on the clean tech material science side is globally, there's much, much more corporate interest and just sort of fundamental economic interest in a lot of the technologies around material science and clean tech than there is in social, local, mobile gaming, right? So you get a very few handful of companies with these vast valuations in that space, because you get incredible network effects in social, local, mobile gaming that you see. The Groupons take off, and the Facebooks take off, and the Zyngas take off, and there are a lot of other that are perfectly well valued. I mean, But in terms of the breadth and depth of technology required to run the globe, that is this broader space of technologies that include data center technologies, include material science, include chemicals. You know, you've got all the whole healthcare sector that has an incredible amount of technological requirements, where there's still entrepreneurship, there's still innovation, there's still some venture capital, but even more so, there is corporate interest across the planet in these emerging technologies and the need for these emerging technologies.
Okay. For these emerging technologies, is Silicon Valley still going to be a major player, or are the newer markets like India and China, which don't have the infrastructures that the US and Europe has to maintain it, you know, they can easily use a lot of the clean tech stuff because they're not based on oil and electricity. And certainly in places like China, they can produce panels and all kinds of stuff very, very cheaply. Is the locus of investing, is the locus of innovation going to move in this area from Silicon Valley to India or China, or both of those?
Certainly innovation is diffusing. Okay. Certainly we're seeing more and more clusters of entrepreneurship and innovation around the world. But ironically, in this environment where you have increasingly sort of the old economy, you know, corporate economics driving interest in a lot of novel technologies, Silicon Valley becomes even more important. Because Silicon Valley, unlike any other location on the globe, has the ability to commercialize innovation. And that's something that's really, really hard to do anywhere else on the planet.
Tell us some more about it, because for people looking at it from the outside saying, geez, there's this huge market in China. Why does a company in China need Silicon Valley?
Because a company in China needs the innovation of a new material or a new chip design or a new software program or whatever the innovation is. A big company, even a small company, I mean a modest-sized company in China or anywhere else in the globe, cannot take on a technology and turn it into a product as easily as they can take a product and integrate it into their product line. And so that's where Silicon Valley comes in. What Silicon Valley is really good at is bringing these scientists and these engineers and these entrepreneurs together with a little bit of money and sort of compressing this mixture and turning an idea and a technology and a business model into a company. And once you become a company, then you can interact with other companies. But it's really hard. It's really hard for entrepreneurs to interact with big companies. It's just, they just don't talk the same language.
Yeah.
And so that's what we're seeing increasingly. We're seeing tremendous amounts of technology that's being cooked here in Silicon Valley. Now it's being cooked, I should say, it's being cooked by teams from around the globe. And so what we're seeing are, we have Russians who are coming here, and Israelis who are coming here, and Indians who are coming here, and Chinese who are coming here with their PhDs and or dropping out of school.
Wait a minute, hang on a minute. We've got the problem with the visas. How can these people still be coming? Seriously. You know, how are people still able to come here? Because we've got the problem with not enough visas.
Well, far be it from me to suggest that maybe they're skirting the laws a little bit. But the good news is, we see these guys who figure out a way, one way or the other,
right,
to the best example that we've done in multiple cases are teams from overseas who the founding R&D is done overseas, and they send over some guys on whatever visa you can come over for 3 months on. And you park in some friend of friend's house, garage, couch, wherever you park, and you find a couple of sympathetic locals who can help drive it, and then you comply with your visa requirements, and you go back home, and then you Skype back and forth until you can raise some venture capital here around the technology that's from over there. and eventually you build up a company here. And eventually at some point, then you can do an H-1B. Once the company gets big enough, then you can meet your, you can comply with your visa requirements. But that's a whole separate topic in terms of what we should be doing versus what we are doing with regard to retaining talent and attracting talent, here in the United States and more specifically in California and Silicon Valley.
Yeah, I mean, so certainly in SVASE, I'm seeing people, as you say, literally from all over the world coming to the events that we run every day.
Right.
And I'm stunned at how many people and the diversity of them.
Right.
So it's still.
And why are they doing that?
And why? Tell me. Tell me.
Well, right? They're doing it because they know this is the place where you can come and have the highest likelihood of success of turning an innovation into a company. Every place else in the globe has nothing close to the infrastructure that we have to enable an entrepreneur to turn his or her idea into a commercial success. And that's what Silicon Valley is good at. And now that the world is open to Silicon Valley, one way or another, Silicon Valley has become stunningly, to my mind, when you think about it, it's become even more important in this whole global innovation ecosystem. So we were anxious, and we're still anxious. There's a lot of anxiety out there about how, oh my gosh, we're going to lose our innovation edge because all of these other emerging economies are going to develop all of their own capability to innovate. And they are, and it is happening to some extent. And that's great, and that's a benefit to all of us on this planet that it's happening. The surprise to me was that in spite of that, we're still seeing increased inflow of innovation into Silicon Valley to get it started here. Now, it's going to go back out, and we'll capture some of the value, either us as venture investors or, the economy more largely, because there'll be an office here and there'll be some employment here. And that's fine, and that's part of globalization, and that's generally a good thing.
Okay.
But we get to capture a disproportionate amount of that value.
Bill, there's so much more we could talk about. Unfortunately, we've run out of time, so I've got to say.
How could that be?
I've got to say, good night from the Silicon Valley entrepreneur, and hope to see you again next month. So, Bill, thank you very much.
Thank you. It was great.
Terrific.